Hey everyone, welcome back to another episode of the Always Closing Podcast. I have Alex Jasso here back with us today. He was actually on our last episode, but we got a lot of traction on that video. Actually, a lot of people were interested in the short clips too. We got a lot of views, so I was like, we gotta have him back. And there's a lot of new topics that we're gonna bring up today, some that you wanted to talk about as well. So yeah, let's get into it.
Let's do it.
So first of all, Happy New Year. How's everything going so far? You off to a good start so far this year?
Yeah, so far so good. Yeah. Again, the events are huge. You know, going to events in LA. There's some in West Covina now. Getting some traction from there for sure.
Yeah, with the event that we have done together in the past, that one got canceled this month, right? Because it was right when the fires were going on.
Yeah. They canceled it. It was, I think it's in like Culver City or Santa Monica.
It was like the day everything got like crazy.
Yeah,
so
right.
Yeah, so I'm sure we'll be seeing you there next month in February when they do it again. What are your goals that you have for this year, for 2025?
This year, I have a goal of closing 50 loans this year. I think it's possible, but I do think it's going to take a lot of work and a lot of effort, not only for me, but also for our processing team. It kind of goes back to our last podcast. I was like, I've talked to a lot of people, I've talked to a lot of people, and from those amount of people, like only a certain amount are going to close. But it's just a matter of talking to a lot of people over the phone, whether it's in person or referrals. I got to talk to a lot of people in order to hit that goal. I think it's possible.
Yeah, so, I mean, we kind of said the same thing this year is like, we're really hitting the events hard. We're really hitting the phones hard. And, we kind of ended the year that way too, and we've seen it be fruitful already. Normally like December, January, those are kind of the slow months in our industry, right? A lot of people take it off. People are not, I mean, even on the client side, they're not doing much during the holidays. But luckily we've done pretty decent the last few months, so we're ready to really ramp it up now. So
yeah.
A couple big events have happened this month that should affect the industry in one way or another. You know, one being locally is obviously the fires that have devastated our area. It's really a tragedy how many people have lost their homes. But it's also having an effect on the market as well, right? So how have you seen that it's going to affect the real estate market, and specifically, like, how about like banks? Are they looking at things different? I know the insurances obviously are.
Right, I was going to say that.
So how have you seen that affecting the market?
I think the fires are going to have they're going to affect a couple different things. I think the first thing is there's already an inventory shortage here in California. So now on top of the inventory shortage, you now just lost a good portion of homes that are no longer going to be on the market. They're not going to be sold anytime soon because, well, they no longer exist, because the Palisades fire took out a lot of properties over there. So now you have even shorter amount of inventory that is available already in the short amount of inventory that we have.
Right.
On top of that, I think you're going to have a lot of the high net worth individuals that live in the Palisades move out of California to possibly Texas, maybe Vegas or Florida, but just leaving California. And that's just not good for just California in general. You don't want the high net worth people leaving.
Right, these are people that own businesses.
Right, exactly.
Really smart people, right, that benefit the economy. So
right.
And the other thing too is like not only are the houses no longer on the market, but the ones that are staying, now they're looking for properties too, right?
Yeah.
I mean, their rents are hard to come by now. Unfortunately, some people are even taking advantage of that, with gouging on prices. So it's really unfortunate to see what's happening. I've also heard that, a lot of them may be moving down to Orange County as well.
Yep.
So that may, the Newport area, people, same type of community as the Palisades, those are going to get more competitive now too, because I don't know I would imagine that's going to take years to rebuild that whole community, you know what I mean? So it's going to be a long time until those people are back in homes right there. So really unfortunate, but, it's part of, I guess, living in this SoCal now, right? It's becoming more and more common.
Right now it's crazy too because people that are in escrow buying a house right now today, January 23rd, 2025, right? People are in escrow. Last minute, the banks are saying, oh, wait, before you fund your loan and before you get into your house, we want to do one last minute check on the property and any property in LA County.
Yeah.
We're going to charge you $250. and we're going to have to go out there. They call it a drive-by appraisal.
Right.
Drive out. Okay, good. All right, it's good.
Yeah.
That's it. $250 last minute. And
Just
some
to
of
see
the clients.
how close you are to the hills.
Yeah,
to the
but
fire.
I have people are buying properties in like Hacienda Heights, Covina. Like they're pretty good a distance away from the fires. Like
Right.
the chances of that property being like damaged enough where it's like affecting the lending on the property,
Right.
I think it's not very likely.
Yeah.
And like super last minute, and like the way banks work, the way the disclosures work, you have to over disclose when you send out your loan estimate, right?
Right.
When you over disclose, like let's just say you disclose your appraisal at $1,000, right? Let's just say the actual appraisal cost, let's just say it's $725, right? And you leave like a buffer there in
Like a
case
pad,
for something
yeah.
like that, right? For okay, last minute they want a 1004D, you have to go back out there and check the property, right? But on one of the files that I had, it was above the threshold.
So they had to
So
come in with more money.
well, there's guidance, like federal guidance, of
Right.
like, if you disclose to your borrower that the appraisal is going to cost $1,000, it cannot go above 10% of that $1,000 quote that you gave them.
Gotcha.
So if it goes above that, now there's it's called you're violating the tolerance basically. Now someone has to cure it, and it's the lender that has to cure it. So now you have to come out of pocket for the difference,
Yeah.
to cure that tolerance. And
Crazy.
like super last minute.
Yeah, I
Yeah.
mean, even when these fires were going on, we had a couple of deals that were like ready to close like that day, and everybody wanted to pump the brakes, to like kind of see what's going on. Like it delayed a couple closings by a few days, just because of the fires, and the lenders were kind of like hold off, they wanted to hold off a few days.
Funding, yeah.
So yeah, I mean, it's definitely made an impact on the market, and we'll see what happens in the near future with all that. Another big thing that's happened this month is obviously we have a new president, and a lot of people are expecting a lot of change as well, right? So with Trump now being in office, what policies have you heard or changes coming to the market that his presidency will have an effect on?
That's a very good question because I think Trump is going to have a major impact in specifically housing. He's already made a lot of executive orders in regards to immigration for this and that, but not anything that I've seen for housing specifically. But I think I was talking with actually another loan officer. We were like, man, the next 4 years, I think is going to be the time to be in the real estate industry. And here's why. If not Trump, who else is really going to focus on housing other than Trump? Like whoever, after the next 4 years, whoever becomes president, are they really going to focus on housing as much as Trump is in the next 4 years? Probably not. Probably not. I'd put money.
I mean, he was a real estate guy himself.
Yeah, exactly. Yeah. So I think the next 4 years, I think real estate it's going to be getting better. I think.
That's good. A little research I did on my end. I think there's a few things that definitely going to help, and some other things that could maybe make things expensive as well. So, for example, on the good side, he's definitely very pro-investor, right? So, things like better tax brackets for corporations, corporate tax rates should be lower. Second thing, like capital gains tax supposed to be coming down. On the flip side, there's other people concerned about certain things, right? So one of the things that he's been talking about is on February 1st, putting in a 25% tariff on product coming in from Canada, right? So a lot of building materials come from Canada. If you talk to builders, developers, they're going to have to pass that cost on if they're really having to pay 25% on top of what they're already paying, right? So all the new home builds could get it more expensive. So, I mean, but hopefully, as I think that's not really going to last too long. And if it does, it's more of like a deterrent or trying to get his way on certain things.
Yeah.
Because that being a long-standing thing, I think would be bad for everybody, right? I mean, for us, for Canada, for whoever, right? But definitely, we don't want a 25% tariff on building materials when we're trying to build more homes. So.
Exactly. Yeah.
But time will tell, though, right? I mean, hopefully things go in a positive direction. I think you believe so do I, and looking forward to that. So one of the things you brought up that you wanted to talk about was fixed rates increasing due to insurance increasing. Why don't you tell us a little bit about that?
Yeah, so I think if you have a fixed rate mortgage right now and you think that your payment's not going to increase because your rate is fixed, I think if you live in California, you might be wrong because the hazard insurance specifically, the way the hazard insurance is right now in California is a lot of the policies, like let's just say you already own a house, okay? The policies that you have, you might be getting dropped sometime soon. They're going out there, checking the house, okay? If there's any hazards, they're looking for a reason to drop people off their policy.
Yeah, it just happened to one of my buddies. He messaged me the other day. He's like, hey, who do you use? Because our insurance just dropped us.
Mm-hmm. Yeah. And I think it's going to happen more often than not. And if you do get another policy, let's just say your policy got dropped. Oh, shoot. Okay, now what do we do? Get another policy, and chances are it's going to be higher. And now, all of a sudden, that fixed rate mortgage that you had is also higher because you're making that payment every single month.
So you're saying not the actual payment on the actual mortgage itself, but your total payment when you account for the insurance, right?
Right, exactly.
Yeah.
Most people have their, they pay their taxes and insurance with their
They
mortgage
impound
payment.
them,
Right,
tax
impound
insurance,
it.
yeah.
Exactly.
Right. So that's something that people maybe need to start considering, right?
Mhm.
And they're not little jumps on these insurance; they're big jumps.
Yeah.
So another thing you wanted to talk about was how do you skip 2 payments when you refinance?
Yeah. This is a big thing right now because some of the banks, I actually have a bank right now doing a temporary promo for people that are looking to refinance, right? They're looking for some type of savings. Maybe they bought a house like a year ago, FHA 6.5%. They're looking to lower that rate as soon as possible, cash strapped, Any money that I can save, I'm willing to save it because it's a tough time right now,
Right.
There's job loss, there's this and that. A lot of people are struggling right now, especially here in California, high cost of living, right? So when you give them the option to skip 2 mortgage payments, it kind of gives people a sense of, oh shoot, so $4,000, another $4,000, I'm going to save $8,000 on top of what I'm saving already on the refinance.
Right.
Let's do it.
Yeah.
And what happens, the way they do it is that second payment, they're putting on the back of the loan. Yeah. So you're skipping it for now, but you are paying for it in the life of the loan, right? But for most people, it doesn't really matter to me. I'll probably refinance this loan in the next 2 years, 3 years, anyways.
Right.
So does it really make that big of a difference? Not really. I'd rather realize the gains right now, this second, and get that $8,000 right
Back
now.
in your pocket. Yeah.
Right. To pay for what I need to pay for.
That's smart because normally when you refinance, right, you normally skip about a month anyways.
1 month. Uh-huh.
Yeah, 1 month. So with this new program, it's actually 2 months.
Right. Yeah.
Wow.
It's not a program. The bank is doing a program where they're giving you like a discount towards your interest rate or towards your closing costs.
So it's one specific lender.
Yeah, one specific bank.
Okay.
Right.
All right. So if someone wants to do that, you're the man to talk to about that, right?
Exactly. Yeah. Or if you're in the process of doing a refinance right now and you're like, hey, okay, got my quote. Is there anybody else that can beat this? Call me. Let me see the quote. Let me get your file actually underwritten, and I can get you another quote. And if I can beat it, great. If not, for sure you're getting the best deal.
Yeah. I mean, even if you're matching the deal, but you're getting those 2 months off, I mean, you're putting some money, you're keeping some money in your pocket.
Right.
What's 3 things that realtors don't tell you when you're buying a home, when you're getting a loan on a property?
I think for realtors, probably the supplemental tax bill is a big thing. Most people don't really talk about that stuff because it's like a one-time fee and it's just like the cost of owning a home. And like most people don't really talk about it, but I believe it's Prop 13 that basically limits the amount of taxes that your tax basis can increase every single year. I want to say it's capped at 2% for Prop 13. So every single year that you own your house, your property tax can't skyrocket. It's capped every single year, right? So when the buyer ends up buying your house and you've been making your property tax payment for, 20 years, 30 years, right? All of a sudden, your tax basis is kind of low because your property value has increased over time the past 20 years. But your property tax basis kind of hasn't kept up with your property value, right?
Right.
So when a buyer buys your house, they kind of have to pay that difference, There's all calculation of how to calculate it exactly, but they're basically paying that difference that you weren't paying over that amount of time. So you might get hit with a couple $100 bill that you didn't even know about,
Yeah.
just because you bought a house and the tax basis was low compared to the price you're buying for it now.
That's true because, I mean, they'll reassess the property every few years, right? But there could be a difference on the time that they didn't.
Right.
So that makes sense. Another thing is, I've noticed too, is like realtors are always push their homes that they're selling and they're pushing the home, but sometimes they don't talk about the area, right?
Yeah, exactly. Yeah. If you're buying a house, like the realtor should be telling you like, hey, go at night, check out the area. If you feel comfortable at night, kind of walking around the area, that's a good thing. But sometimes you'll go out there and it's like, oh, this is not really what it's like in the morning.
Yeah.
This is not that nice.
Right.
People come out. Maybe there's like more homeless.
Yeah.
And like if people are raising kids or you have like a whole family, that it's something to consider when you're buying a home.
Right. On the flip side, what's some things that maybe like banks don't tell you or lenders don't tell you when you're buying a home?
That's another big thing. Lender junk fees. I see that all the time. People will come to me and say, hey, I got a quote. Can you beat it? Here's the quote I got. Okay, look at it. Oh, you're getting charged points. Oh, there's a third-party processing fee on here. Oh, there's a origination fee on here.
Right.
And it's like, if you're a buyer and this is like your first time buying a house, you don't know what's junk fees and what's not.
Right.
It's like, okay, this is what the lender's charging me. I guess. Is this normal? So especially if you're a first-time buyer, get a second opinion on your loan. You do not want to overpay for your mortgage, and there's a lot of tricky ways that lenders will work in the fees to make it seem like you're not really getting that bad of a deal,
right?
But you're overpaying for it one way or another, whether it's on the front or the back.
I mean, that happens in our industry in general, right? I mean, it happens with us. Sometimes we'll have people call us on like a purchase, and they'll be like, hey, this company XYZ escrow company is charging $500 for an escrow. I'm like, like how's it making money on that? But then it's like, then you start looking at but then there's this fee and that fee and that fee. Before you know it, it's 2-3 times that.
Right.
Of course, there is fees, like notary things like that just courier fees that the company does have to pay. But there's a lot of escrow companies that will add in just a bunch of little like doc fees and things like that. You know what I mean? That stuff that should be just their expenses, but they pass it on to the consumer. So
yeah. Another thing too for banks, like if you are someone that's purchasing or refinancing, and you're going through your Chase, Wells Fargo, U.S. Bank, Rocket Mortgage, there's other banks in the wholesale channel that people have no idea. They go to their local bank and they apply for a loan, and they don't realize that there's a whole different world of pricing. There's different banks that offer wholesale loan pricing,
right,
where you can save potentially, a couple percent on either your rate, or maybe it's a discount to your pricing, so you're not paying as much to get that same mortgage that you could have got at Chase.
Right.
Because Chase doesn't just do mortgage. They have car loans, credit cards. They have a lot of different departments,
right,
a lot of overhead. Therefore, they have to pay everybody. They have to make a lot of money. Therefore, on each loan that they originate, they have to charge the borrower a little bit more than like a smaller bank where they don't have as much overhead, right? So they're able to kind of get through more loans and just cut the pricing on every single loan that runs through.
Right. For someone that maybe is brand new to all this, why don't you explain a little bit how points work as well?
Mm-hmm. Sure. So this is it's called the yield spread premium. Okay. A little bit difficult to understand for someone that's like a first-time buyer, no experience in mortgage lending, but basically, if you're getting a loan, you're going to be in a certain bracket. Okay. So let's just say the market rate for your file, for your income, your debt to income, your loan to value, your credit score, the type of property itself, the market rate for your loan product is a 6.5, let's just say, right? You can always buy it down with points, okay? Basically, it's prepaid interest, okay? You're just prepaying the interest to lower it on the front end, okay? If you want, you can do that. If you expect interest rates to come down the next 1, 2, 3 years, probably it's not best to do that. You might want to just save your money and then refinance once rates actually do come down. But let's just say you think, you know what, I don't think rates are going to come down in the near future. I'd rather just pay a couple points, lower it, and then my monthly payment is lower, right? So back to your market rate for your loan is 6.5, right? Okay. You can buy it down to, let's just say, 6%. And that'll come at like a $2,000, maybe $3,000 cost, right? Something around there. Or you can say, you know what, I'll take a higher rate, but I want a credit for that difference. So that $3,000, if you go the opposite way, you go higher, you'll get a credit of $3,000, $4,000 that you can apply towards your closing costs. Okay. And for some people, that they find value in that, Right. But right now, affordability is such a big issue where it's like, I'm barely qualifying at the market rate. I wouldn't even qualify at a higher rate to even get that credit. Exactly. So most people are just taking either the market rate or maybe paying a little bit of points to lower the interest rate. One
more thing or another thing that you brought up that you wanted to talk about was why you should never use an FHA loan when you're buying a 3 or 4 unit property.
So if you're buying multifamily property, this is something that most lenders, they may not know. And this might come up like last minute, once you're already in escrow, already have money in escrow, and you're like, oh shoot, like you didn't know about this? It's called the self-sufficiency test, okay? Getting an FHA loan on a 3 to 4 unit property, there's a calculation that the lender has to do, okay? So let's just say you're buying a fourplex, okay? 4 units. 1, 2, 3, 4, you're gonna live in 1 unit. FHA, you have to live in the property, right?
Right.
You can, well, the calculation works like this. They're going to take the rental income from all 4 units, right? So let's just say you can rent out every single unit, including the one that you're living in, right?
Right.
2,000, 2,000, 2,000, 2,000, right? So $8,000 in total rental income from the property. You're going to multiply that by 75%. So let's just say it's, I don't know, $7,000. Let's just say.
Yeah.
$7,000. That's got to be equal to or greater than the mortgage payment on that house, right? The PITI, total,
Right.
everything, right? If it is not, FHA won't do the loan. So you got to find a way to either lower the payment or increase the rent on the property in order for it to work with an FHA loan, right?
Or bring in more money to
bring in
get
more
the
money.
payment down, yeah.
Exactly.
Okay.
But some people, some lenders, they don't read the guidelines, they don't know the product as well for a specific property. So especially for a 3 to 4 unit,
Right.
they may not know that exists. For a duplex, it's fine, that doesn't exist. But for 3 to 4 units, that is a big deal. And it might be better to just do conventional financing.
Yeah, I was going to ask you, what do you recommend then when it comes to those type of loans?
If you can't put more money down and try to make it work with an FHA loan, then I would just flip it to conventional. Now it's a Fannie Mae, Freddie Mac loan, and you can still come in with very little money down, but they don't have that same guideline.
Okay. One thing that I wanted to ask you that you hear a lot, and people will always tell you, if you can make 1 extra payment a year, tell us what the benefit of doing that is and how much that can actually lower the whole term of the loan.
Yeah. So if you make an extra payment towards your overall mortgage, what you want to do, and what some servicers will allow you to do, is apply that monthly payment directly towards the principal balance. So not towards interest at all, directly towards the principal balance, and all of a sudden you'll see a dramatic decrease in your mortgage balance over a quicker amount of time, as opposed to just making your normal payment where at the beginning of your loan, most of that payment is going towards interest anyways.
Right.
When you first get your loan, maybe 5-10% of that actual payment is going towards your principal balance on your loan. Most of that payment is going towards your interest at the very
How long does it
beginning.
take normally for you to get past that period?
But if it's a 30-year fixed loan,
Yeah.
probably like halfway in. Like 15 years, once you're 15 years in, probably about half of your payment is
You're
going towards
starting to get
principal.
more towards the principal.
Right, exactly. Yeah, but until then, most of it's going towards.
But what I've seen too is like when you write that check, right, for that extra payment that you have to write on there.
Yeah, no,
Actually, you have to be specific that it's towards the principal only.
Yeah, exactly. Yeah. If you don't write it on there, they're not inclined to apply that. You're like, oh, okay, no.
Right.
We're just gonna apply towards the loan. Yeah.
So that's a trick and a tip that you definitely got to do if you are going to be doing that. But it's definitely recommended because I know, in some cases it could lower the whole term by like 10 years sometimes.
Right,
On
exactly.
a 30-year loan. So, what else do you got going on? If someone wants to come meet you, talk to you about this, what events are you going to be at coming up?
Next week, I believe we have our event in West Covina. So if you're local to West Covina, you just want to check it out. Maybe you have some real estate questions, just general stuff, or any like mortgage questions. Come out. I meet there's like a lot of financial advisors. There's lawyers that attend. There's like bookkeepers for like small businesses.
Right.
Also realtors, of course, that are there as well. So if you have questions, it's cool to like pick people's brains about their experiences, their thoughts on the market.
Right.
And there's our team, of course, that we do mortgage lending. So if you want an instant quote on your scenario, or you just want to see what it would look like, or what things you should do now to be ready in a couple months from now, I think attending that event in West Covina is really good.
What's the date on that again?
I don't know off the top of my head. I think it's next week, but
Okay.
but
Where
if
could they
you go by
follow you?
info-
Yeah, where could they follow you so they can keep tabs on the events
Right.
coming up?
Follow me on Instagram at AlexNLO, and I'll be posting stuff in my story, so you'll see it on there, and you'll kind of see when the events are. And not just the event in West Covina, there's also like smaller events. So like Chamber of Commerce actually just had a meeting. That one was pretty good. Probably a turnout of like 30 people. But business owners, so like really cool, really cool. So I'll put it on my story.
Cool. Yeah, we like I told you before, we've been starting to hit the events more often. I think we got a couple coming up. Last night we were at Real Estate Money and More in Newport Beach. So it's a good one to maybe check out too. There's a lot of investors out there, people that are just doing bigger projects. So
Oh yeah,
and I didn't see a lot of lenders out there. So
it's good. Yeah, 'cause
Yeah.
some of them there was like, oh, showcase lender.
yeah,
Oh,
yeah. Like the
lender
one where I
too.
think we met you, there was a lot of lenders there. Like when we
Yeah.
all went up and talked to explain what we did, it was just like lender after lender after lender. But that's awesome, man. I think people definitely are getting a lot of value out of these videos with you, and hopefully, you know, someone that has more questions about this, they got your contact info. We'll put it here as well.
Yeah.
And definitely reach out to my man Alex. He's the man to talk to.
Or comment below. Comment your questions. Like if you don't want to, if you're like, you know, too shy to reach out or call. Some people don't want to call. You know.
Right.
Text or comment below your question, and we'll respond to the comments, and we'll just get you an answer there. Or I'll just send you an email with an answer, full breakdown of your question, and I'll give you guys a very like cohesive answer as to scenario what your question is.
Cool. Well, there you go. Thanks again, everyone who's tuning in to the Always Closing podcast. Alex, we'll do it again. Hopefully again. I mean, we got a good little flow going with these, so we'll keep doing them.
Awesome.
Thanks again.
Thank you.
See you guys next time.